Yeah, let's back to stocks chat and specifically what our next guest thinks about the beginning of an imminent reversion in local equities. To find out where he thinks will fare worse, we welcome Brad Smoling into the conversation. He runs Smoling Stockbroking and joins us now live from the beautiful Gold Coast. Brad, welcome to the program. And look, give us your thesis. Why are we going to mean revert for the stock market here in Australia?
Well, look, thank you firstly for inviting me to your show. I feel that the valuations are really going to be difficult to sustain. When you've got a severe downturn like this, you can only use financial engineering for so long to make things look good in a relative sense to support the prices. There's a lot of metrics you can use. Price earnings is one that I like, but given the backdrop, I really don't think that earnings are going to be able to keep the elevated prices that we're seeing right now.
What do you make the argument posed by some people that comes down to equity risk premium on that metric based on what long bond rates are doing at the moment? The stock market isn't that expensive. Is that not correct?
Look, I hear what you're saying. And yes, when you look at bonds and you look at cash, there's really not a lot of return there. Thus, equities is getting a focus. But I think the market is being driven by sentiment. And the market can be driven by sentiment for so long until it doesn't work anymore. Eventually, these companies are going to have to report. The earnings, I don't think, are going to be very good at all. In some cases, you may see dividends, which are discretionary, by the way. The companies don't have to pay them. And if they can't afford them, they don't get paid. I think once the reality sets into the actual financials that no one's really looking at right now, or the provision for business downturn or provision for doubtful debts and things like that, I think that sentiment drive that we're experiencing right now is going to end pretty abruptly.
So, Brad, when you say abruptly, do you refer to the upcoming earnings season kicking off in about a month's time?
Very, very much so. Very much so. I think we've had a lot of benefit from all the government stimulus. We've had a lot of benefit from, things being kept calm, for a better word. But the reality is really going to kick in when companies can no longer mask the downturn in business to support the current stock prices in the companies.
So I'm curious, if you're positioned defensively, is that cash? Is that some more defensive sectors of the market? How do you play it? Because you and I both know, if you are looking for income, if you are looking for yield, you're not going to get it by squirreling away your money.
Correct, absolutely right, and that does present opportunities. I believe that the final destination is what we call stagflation, which we haven't seen since the 1970s, which is stag, which is low growth, and inflation, which is, the valuation of currencies and things of that nature. So I'm actually looking for companies that got very good cash flow in this environment. I've got a lot of clients that are very unhappy with the lack of dividends and particularly from banks and things of that nature. I'm actually buying good quality gold producers. A lot of them are producing an ounce of gold for around about $1,000 an ounce. They're selling it on Australian dollars for over 2,000. Very good margin, very good cash flow. I think they will possibly be some of the dividend producers going forward. So essentially, if you do get that stagflation environment, which I believe is coming, you really want to focus on hard assets and companies that are profitable in those hard asset markets for growth and for your income as well.
Brad, we're running out of time, but that's what you're looking to invest in this type of environment. What would be a sector or stock even that you would completely avoid at this point in time?
Oh, look, I am amazed at Afterpay. I think it's a bit like the Australian version of Tesla. It's, for me, call me old-fashioned, but a company has to be profitable in most cases for me to put my clients' money in it. And I just see that going to levels that I think it's all sentiment, and I suspect it may enter tears for some people, unfortunately.
Well, Brad, thank you so much for joining us here today. Go out and enjoy the lovely day. It looks like it's a beautiful day outside, and hopefully we can go and have you back here in Ausbiz.
He's hard at work,
Yes,
Scuddy.
thank you very much.
All right, thanks, Brad.